Hi, Tony here. US equities finished higher on Friday and for the week, helped by strong earnings from Microsoft and Alphabet that more than offset softer results from Apple and Meta. Cooler inflation data, a pullback in oil prices, and the Fed's decision to keep rates unchanged all provided extra support. Over the weekend and into the new week, Middle East developments appear to have taken a more constructive turn. President Trump said Saudi Arabia, the UAE, Qatar, and even Iran urged him to delay planned strikes in a renewed push for diplomacy. Of course, we'll need to wait to see whether this holds or turns into another false dawn. Meanwhile, the Q2 earnings season continues with reports due from names including Palantir, Snap, Caterpillar, Uber, Disney, and Airbnb. But the one that everybody will be paying most attention to is SpaceX's first earnings report since listing back in mid-June and after a sharp 36% fall in its share price during July. On the data side, all eyes will be on Friday's non-farm payrolls, preceded by the ISM PMIs, JOLTS, and ADB. Let's take a look at the charts of the NASDAQ and Dow Jones to see how they're lining up at the start of this new week. All right, just to recap, this is that 35% rally from the March lows, which took us up to this high here in early June. Since then, we have seen the NASDAQ undertake a correction, and by and large, we've been looking for a pullback towards 28,000. Now, there was some overshoot on Wednesday last week, but the NASDAQ promptly regained, I guess, the trend channel support that you can see here, and overall the safety which this trend channel has provided since that high we struck there in June. So for me, I like what I'm seeing. I believe this is a false break lower, and I think that if the NASDAQ can get above 28,500 on a closing basis, then we can probably start to conclude that this correction is complete at this low here, and that the uptrend has resumed, which will see a retest of this high and a push towards 32,000. Of course, if we were to see renewed weakness, there is some support coming in from the 200-day moving average, sitting at around 26,500. But overall, we are liking what we're seeing here. We just need to see a sustained close above 28,500 to confirm that a low in this correction is complete. For the Dow Jones, a similar story. Here's that rally from the March lows, which took us up to this high here in early July. And what we've seen since then has been corrective price action, I believe, by and large, holding above this 51,600 to 51,300 support level we've spoken about. This, to me, sets up a new leg higher, or initially a retest of the record high at 53,294 before a push up towards 54,000. Now, that is going to be my view, and it stays my view unless we were to see a sustained break below 51,000-ish. And then, of course, you'd be looking for a deeper decline back towards the 200-day moving average. That's all from me this week. Thank you for listening and have a great week ahead.